Welcome to November, and if you've been following, you know it's time for the market report from the prior month. So that's October 2023. Real estate's in the news all the time. It's usually been good, but these days not so good. So let's check out what's been going on. So the Hamilton market at the end of October, we saw the median price fall again down to 712,500. That's the lowest end of month price we've seen in 2023. The prior low was in January at 720. We're down 7.5% from the peak of the year, which occurred over the summer in July and August. June and July. And from October of last year, we're down like 0.35%. So basically the same as October of last year. So flat. Nobody wants to see flat growth in values, but it's not like down from a year ago. But we'll be getting to some other news on that. Now, again, over the long term, it's always nice to keep things in perspective because investments in any type of asset other than a government bond have variability. There's risk involved in them. There's ups and downs. So over 10 years, the compounded annual growth rate in the Hamilton market, even where we are now at the end of October, the prior 10 years, 9.5%. 5 years, 8.9%. Now, the 3 year compound annual growth, not as rosy as the 5 and 10, 4.3%, but still positive. It's just really the last couple of years where we've seen, some, over fluctuations and situations where people are, in trouble with their real estate, and we'll get to that. Okay, and from the peak again in February 2022, we're down over 25%, just 25.6%. Let's get, oh, sorry, I missed that whole chart there. So just in case you missed it, we can see we're slightly down from the peak, but about where we were last year. So here we are with cumulative days on market. Nothing crazy. I think the number was 25. Typical time it took to sell a property. So just on a historical basis, that's pretty healthy. Still pretty normal. Now, this is the months of inventory. So this is really just kind of a relative look at where we are with supply and demand. And we're at 4.7 months, which if you were watching last month, we were at 4.5, and that was the highest we'd seen in 10 plus years. So we beat that. Now here we are getting to new listings. So a significant number of new listings, but nothing out of the ordinary. 1,200. It's slightly high for October, but not out of the ordinary from a perspective of new listings coming on the market in the month of October. But where we get to next is the big culprit here, and that's number of sales, which is indicative of demand. As long as demand is not restricted by the amount of supply, which we had seen many times over the past 2 or 3 years, we're not restricted by supply. So this is the real amount of purchasers that have been out there in the market. So while October wasn't as low as September, it looked like it might have been. It came in right around the same. So only 410 units sold in the month. We may see a few more trickle in over the next couple days, but basically around 400 again. And that's the fifth lowest month of activity in the last 10 plus years. So demand really, really low. We all know why. Prices are higher. We have less, inflation, less disposable income, and then of course the cost of buying with the increased interest rates. So that has led us to where am I here? Pardon me. So that's led us to an increase in active listings where we're close to 2,000. Again, we have seen months this high, quite a number of them over the last 10 years, but this is the second highest we've seen in the last 10 plus year period. The previous high was like back in June of 2013. So inventory is pretty high compared to what we've been used to. Not out of the ordinary, but it could be going in that direction. And one thing to be looking at, what I'm really interested to see is every month, as far back as we can see, 10, 11 years, inventories drop from October to November and from November to December. reason is that demand doesn't necessarily slow down, but the number of people that want to put their houses on the market in November and December, that drops off. Usually they'll delay that until the new year through the holiday seasons. So that's going to be interesting. If we see the amount of inventory stay the same or go up, that's something that we haven't seen in a really long time, and I think that's a distinct possibility because if we go back a couple of slides here to sales to new listings, again, we were down at around 30% at where we were in September, and that 30% mark is we haven't seen anything in the 30s for years and years and years and years. So. Inventory at relative demand is completely outstripping demand. So yeah, we're seeing that manifest itself in higher numbers of inventory. So if you're a buyer and you can afford to buy right now, if the payments that you're going to be making make sense for you, then you got lots of opportunity out there. So yeah, so that's where the month has ended. And will be, like I said, real interesting to see what happens in November, especially as we're on this current trend, and there's no reason to believe it's going to change that much because interest rates, even though interest rates weren't increased, they were decreased. So people with the variable rate mortgages, they're not seeing those payments come down. If people are renewing in this period, they're renewing at rates that they're not used to. So it's all becoming more expensive for everybody to own a house right now. And we're seeing that in the very strong pendulum shift from a seller's market to a buyer's market. So anyways, we'll be back here. Have yourselves a great November. Stay safe. And if you have any questions, feel free to reach out. Always happy to chat. Thanks.